It's time for the Southern California housing market update. This time we're diving into single family and multifamily numbers. We're going to talk about pending sales. We're talking about closed sales. We're going to talk about new listings. And we're going to run through median home prices. There's some surprises in the data, including the multifamily numbers, something we haven't seen yet. Hey there. Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions during these crazy days, and it is time for part 2 of our housing market update. Earlier in the week, we talked about pending doom and showed how pending sales numbers are at record lows during this time of year. Now we're going to continue and add in the rest of the data that we didn't give you in the first video. So if you're ready to dive into single family and multifamily numbers for Orange County, LA, San Diego, Riverside, San Bernardino, and Ventura counties, you know what to do. Hit that like button and let's get started. Oh darn, I forgot to turn on my subscribe light. And here we go, diving into the Orange County data first for Southern California single family homes. Let's see where things are right now, and we'll slowly bring the data up. There we go with sold properties, and some people have been saying, oh, realtors aren't telling the truth on what's sold. Sales are down. Well, yeah, we've been saying that sales are down, and we've been showing sales are down. And you can subscribe to our email newsletter, and you can get these charts, and you can see that sales are down. We are at record lows for all of these categories. Let's look at new listings. And there we are again. We are at record lows for new listings. Inventory is still not yet coming in a big wave to the market. And we showed that in part 1 of this video where we talked about pending doom, where we showed you the inventory levels in the Southern California counties, plus at the California and national level. And then we get into properties going under contract. And this is very important because this is where things are headed in the future for closed sales. So new listings are seller supply of homes in the market, and pending sales are buyer demand. So some people are saying, no, nobody's buying. Well, yeah, there are. There were 1,465 properties that went under contract in the month of October in Orange County, but that's at a record low, as we can see. You can see 2020, we had over twice as many homes go under contract. Here in 2021, we have what I was calling the twist, where the number of escrows, the number of properties going under contract, was greater than the number of new listings. That's when inventory was really tight. We do have a bit of a gap between new listings and pending sales, so it's moving closer to a more normal market. For example, the gap between 2019 between new listings and pending sales. But the big news here is that pending sales are low. And why is that? Well, it's no surprise. Interest rates have gone through the roof and will continue to be up for a little while until the Fed stops using the sledgehammer, which hopefully is soon. As discussed in part 1 of this video on pending doom, this is unusually low for this time of year. And you can see year over year that it is unusually low. So this is going to make for a continuing interesting fourth quarter as we get into November and December. We can expect that this will be one of the slowest fourth quarters that we've probably ever seen for real estate in Southern California. And here's Los Angeles, record lows for all the numbers, and these numbers are so low that they're almost close to what the sales numbers used to be for Orange County, which is crazy because there's a whole lot more properties in Los Angeles. So we can see this market is slow here. The other thing that's important, and I usually mention it in the multifamily section, is that they are still under eviction moratorium in Los Angeles City and Los Angeles County. So that is certainly affecting inventory because those sellers can't get their tenants out to sell if it's a rental property. The new buyer cannot easily get into the property in LA County. It costs piles of money if there's a tenant. In LA City, there's nothing a new owner could do to move in. So crazy days for inventory in Los Angeles, another market where things are down. Riverside, and we saw in Riverside that in part 1 of this video that inventory is increasing, and we can see why. The gap between new listings and pending sales has increased, and this is a big gap, bigger than 2019, not as big as 2018, so bear in mind that there was a bigger gap then, but we're dealing with like 60% of the number of listings and 60% of the number of sales at that time. So the numbers are down. So we've got to continue to track Riverside at this level where we give you this data and the inventory level, and using the Altos research reports. San Bernardino, we can see again record lows. That's going to be the trend. It's record lows for all three. The gap is similar to 2019, maybe close, maybe halfway between 2019 and 2018 for the number of properties that are listed and the numbers that are going under contract. Just record lows. Will be the same thing across the board. Ventura all over the place. They're very quick to drop in demand in Ventura. It isn't necessarily a bellwether for other Southern California counties because we've seen this in the past where their numbers are different. But look at that big drop. It is another market where the peak of 2020, we have half the number of properties going under contract, actually less than half the peak, and this exact same time in 2020 versus 2022. So crazy drop. And San Diego, who seems to be doing well actually in this market, we saw that in the Altos research reports. Again, record low, no surprise there. We can see the gap between new listings and pending sales has widened, but it isn't too far off of what we saw in 2020 for that gap. It's just half the number of properties going under contract. So you can see that basically sales for Southern California are being cut in half as compared to the peak that we saw in 2020. And don't forget that we're real estate agents based in Southern California. I know a lot of people are wondering if they should even think about buying or selling right now. Reach out to us for a no pressure, no obligation consultation. There's a link below. And if you're looking for an agent outside of Southern California, make sure you reach out as well. We have a link for that too. And now let's run through the multifamily numbers. One of the only places you're going to find these numbers for Southern California, and this is anything 2 units and larger. And what we will see as we go through the counties, we will see that the high interest rates are finally starting to hit the multifamily property sales as well. It wasn't initially. We didn't see this in any other month, but now we're finally seeing it. And I'll dive in and again, subscribe to the newsletter so you can take a closer look at these charts. But you can see new listings are at half of where they were in 2018 and 2020, but pending sales are down as well. So it's finally hitting. The fact that rates are so high, it was part psychological and hearing all the bad news. That's what's affecting investors, but it also is leading to making it tougher to make a property cash flow. Those are real issues when you have a high interest rate, a higher cost for debt service. Looking at Los Angeles, again, still under eviction moratorium. We can see listings are down, but we got a big gap between the number of properties under contract and the number of new listings. This is a big drop in Los Angeles multifamily sales. So this is an interesting trend to see. Riverside, big drop as well. Look at that. Last year for properties going under contract, we had 52. Now we're at 19, so less than half. That's a big drop. We also have a big drop in new listings. So this is interesting. And look at the big drop. The number of properties that sold is down so low. Now we saw pending sales were down, but these are crazy low numbers for multifamily. Again, interest rates affecting the multifamily market now. And San Bernardino listings are actually higher than last year, but you can see pending sales are much less than last year. So again, high interest rates. Ventura is all over the place. We can never figure out what's going on there. So just if you're interested in a lovely place to buy multifamily, go ahead and buy there. And then San Diego, which has been a strong multifamily market, listings are down. They're a low. Last year had about the same, but we can see demand is incredibly low. So less than half of the properties going under contract than we had last year, about half of 2020. So crazy low numbers. Interest rates are affecting multifamily now, making it more of a buyer's market for multifamily. And diving into the median home price for October of 2022 using our handy InfoSparks tool. So we have Orange County, Los Angeles, and Riverside here, and there's no surprise, but those median home prices are down. So Orange County is at $950,000, Los Angeles is $825,000, Riverside is $565,000. Now, what is different from years past is that we peaked much earlier. We should have peaked later in the summer and then seen a price drop. in the median home price. It is normal. The median home price typically drops around this time of year, but we peaked early and we have dropped fast. So the other interesting thing is to look at the year over year prices. So Orange County, it is a 2.7%. That's positive 2.7%. LA 1.5%. Riverside is 4.6%. So Riverside is the highest here. And again, this is year over year, comparing median home prices year over year, the percent of increase. Now, what's new here, if you've been watching these for a while, you remember when these were 18, 20, 22%. Year over year, we were seeing those increases. And I said, hey, the first thing that needs to happen is those increases need to get to a more reasonable level. Those are way too high. These are more reasonable year over year levels, although even 4.6 is still too high for Riverside. Do me a favor in the comments section. I want you to make a prediction, and I want you to predict when these positive year over year numbers will turn negative. Do you think that's going to happen fourth quarter? Do you think it's going to happen first quarter 2023? Do you think it's not going to happen? Do you think things are going to turn around? I want you to tell me in the comments below. I want to hear your predictions. And the other three counties, we find something interesting in San Bernardino. It's actually stabilized. It is supposed to drop this time of year, and it has. It was level in August. It was level in September at 500,000. It only dropped 1,000 to 499. So this is a year-over-year increase of 6.2%. That's still too high. In a normal market, it shouldn't be that high. Ventura and San Diego, they're battling. They're duking it out often. You can see the lines overlapping. They're often duking it out for median home price. Very similar numbers. In fact, for October, they're identical numbers. The Ventura County increase year over year is 2.6, and San Diego's 4.4% year over year. Really, in a more normal market, it should be around anywhere from maybe 2 to 3%. So these are close except for San Bernardino. Again, give me your predictions. Which county first will be going into the negative and when it will happen? I want to know. In addition to your homework from the median home price section, I have another question for you. What kind of data are you looking for right now? What questions do you want answered? Please let us know in the comments below. It is a crazy time, borderline recession. Prices may be dropping a little, may be dropping a lot. What questions are important to you? Please let me know in the comments below. Make sure you're subscribed to our free weekly email newsletter so you can get the charts from this video and take a deeper dive into the numbers. And make sure you check out part 1 of this video where we talked about pending doom. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.